Welcome back. I made a video yesterday on Palantir stocks decline in the end of the day yesterday, which came as a bit of a surprise with the news announcement coming out around potential reduction in defense spending. Palantir lost 10%, has lost another 10% today, going as low as $95 per share. This is coming off about 25% from where it was trading a couple of days ago. And now the question we have to ask is, what's going to happen from here? So I have many thoughts about that, but I also want to throw in something else, which is Palantir recently released its 10K filing. And these filings are annual filings where they're required by the SEC to disclose any material changes in the business in addition to the latest financials. But the financials are not the interesting part because we already knew that from their quarterly release. What's interesting is the changes from their last fiscal year to this fiscal year's report, which is represented in the black line report through FactSet. Software costs thousands of dollars, but it's worth it to be able to share these videos with you and show the actual fundamental differences in what exactly has changed in what Palantir is reporting to investors. Otherwise, you would have to read hundreds of pages and cross-reference. It's really a lot of work. So I'm summarizing this for you, Palantir's hidden details from the 10K, and you can make up your own mind as to whether or not this is impacting the stock, because I think the defense spending reduction is more of a neutral news story for Palantir. And some of these other things we're going to get into may or may not have had a bigger impact. So let's get started. The first of which, again, some of these are small, some of these are not so small, but we have Alex Karp, as of the beginning of fiscal year 2024, began to use an aircraft beneficially owned by him, known as the executive aircraft, for non-commercial air flight for business and personal travels. And during the year, the company incurred expenses related to the use of the executive aircraft being $7.7 million. So I'm glad to see something like this is happening. Of course, it's an expense to the company, but take flight very seriously, especially for our CEO. Additionally, we have what seems like the elimination of Palantir's focus. I don't think it was ever a very large focus, but focus nonetheless on diversity, equity, and inclusion. We know this has been a focus of the recent Trump administration, moving away from DEI, and many other companies are following suit. It looks like Palantir has removed this from their disclosure to investors about what their DEI team does. And I don't know if it was ever a driving force. I think Palantir was always very merit-driven, but nevertheless, being a tech company, I think you certainly are beholden to certain things. And even getting investors, a lot of that ESG and the governance and this and, whatever may have played a part, but it looks like they're now moving on from that. Make of that what you will. We have the interest expense, a lot of mentions to this being actually deleted and removed because Palantir is cash rich. They're no longer paying interest expense, which is great. We know interest rates are still fairly high. They're actually earning those interest rates and interest income, and they've pretty much removed all references to interest expense, unless I'm incorrect, which I do not believe I am. We also have the elimination here of the mention of alternative investments. So that's where they said our alternative investments include gold bars and are recorded in prepaid expenses and other current assets on the balance sheet. So as far as I understand this, it looks like they have actually sold their gold bars. I don't know if I can't confirm this to be true, but usually when you're removing something like this, it tends to indicate that is the outcome. And so that was a very small impact for Palantir. I believe it was only $50 million, which is very inconsequential at this point. I'm sure they made money on the investment, but let's move on here. They've also eliminated some text around business combinations, which was in respect to Palantir Japan and some ownership there. I don't think they have divested from these investments, but they're putting less of a focus on them. So again, less material in my opinion. This is worth mentioning, like they're changing the language. They're less focused around business combinations, which I think is a good direction for where they should be going. They should be very focused on their first party work, their platforms, and what they're doing there, and less of like an inorganic partnership to buy revenue, which is what this back debacle was about. And I think obviously that is way behind the company, but even something like this, partnerships are great, I think, but it's almost, in my opinion, a lot of extra work for not as much benefit. And I could be totally wrong in certain situations, but I personally would love to see the Palantir engineers working on making the platform better, more accessible, more self-serve. And so there's less of a burden to actually working with it and scaling with it, and moving forward with it. So now we get to the part about the insider trading arrangements. We covered this yesterday. We do have a new part here as well, but karp has filed to sell 9,975,000 shares, which is the maximum number of shares, so it could be less. And subject to taxes, that's going to be an enormous tax bill. But this is plus or minus $1 billion. Now, Palantir trades north of $200 billion per share, so you consider 0.5% of the market cap is what he could be selling over time, over 6 months or whatever it may be. The duration of the trading arrangement is until September 12th, 2025 or earlier. And that's what we have there. In addition, Stephen Cohen, president, secretary, and member of board of directors, adopting a similar arrangement in the Rule 10b-5-1, providing the potential sales of Class A shares through various transactions upon the occurrence and satisfaction of certain price and other conditions, with 4,060,000 shares being the total of the maximum number of shares. This is lawyer language, which is just mind-numbing to read. That is an equally large and I think less talked about figure, right? It's not 10 million, but it is 4 million. So that's about a $400 million worth of shares, unless I'm wrong. And of course, the share price has declined. So by the time he sells, it could be less. But nevertheless, that is an enormous number of shares. They're both filing this through the annual report. So it's not, I don't think this is anything you can say is related to the fundamentals where they're trying to get as many shares sold as soon as possible, right? Because this is a routine, regular time in which you would file to sell, which is the annual disclosure to investors. So I don't think this is an alarming, a short-term signal, but it does signal that these co-founders, there 4 of them and 2 of them are represented here, are continuing to divest over their internal holdings. So again, you got to sort of come to the conclusion of what you think that means in your own internal beliefs as an investor. But again, they get issued shares as part of their service to the company, which means they're never going to be buying shares because they get issued them as their employment allows. They're probably going to be selling them at some point. So when the stock goes up 5 times, 10 times, 15 times, they don't know where the stock is going either. I'm sure they didn't want it to fall from $45 to $5. So they couldn't control that, much like they can't control it going to $125. So all of that to say, insiders are going to sell. This happens for every company. These are some large sales. There's no sugarcoating it. However, I do not think this is the end of this stock's run, nor is it the end of this great company driven by these incredible co-founders. We also have the departure of the chief accounting officer. This is not new. However, we know that it lists here in the 10K that David Glazer, who is Palantir's CFO, is taking over on an interim basis. He will assume the responsibilities of principal accounting officer effective February 25th. And presumably, they may or may not be filling that position. I think David Glazer has done an incredible job with the financials. This company has been fundamentally sound since the beginning. Lumpy behavior when it came to the growth, but largely out of his control. and he's done an incredible job shoring up the financial abilities of this company. So he will now be taking on more responsibilities. Okay, another thing we have here is just Palantir noting that when they're displaying their revenue chart, they're saying that in the green part down here, generally, increases in revenue from our existing customers are related to increased adoption of our products and services within their organizations. And you might say, well, obviously, but it's still an important addition. They chose to add this for a reason, right? And why did they choose to add this? They chose to add it, I think, because they're saying that the increased adoption within the organizations is what they're seeing is driving a lot of growth. Now, this is great news. If you've been following Palantir for a long time, we know the land and expand strategy is very important to them. And if they're continuing to see the ability of these companies to continue to adopt a lot of the products even after they've gotten onboarded, that's a big deal because we know that's going to drive net dollar retention, which is a key metric for software companies. And it's just great for the overall business. One of the sayings in business is the easiest customer to sell to is someone that's already bought from you because they already have that relationship. There's no additional costs associated with acquiring a customer, right? So this is great news for Palantir overall that they're willing to say that the organizations are continuing to adopt their products at an increasing rate. Last thing we have here that I wanted to mention that they added under customer impact, this section that just gives investors an understanding of what Palantir's products are actually making possible. And it's this example where it says a European telecommunications company needed to process personal data for a customer support workflow while complying with the necessity and proportionality requirements of the European General Data Protection Regulation, the GDPR, which in my opinion is an absolute nightmare. I've never dealt with it, but I know there's a lot of problems with that, and it seems like a solution that Palantir could provide. So it says the client leveraged Palantir's minimization tool to obfuscate sensitive data in workflows while allowing cell-level access by operational users based on demonstrated needs. So the reason I read that, there are still so many untapped Palantir solutions. Like they're continuing year after year to update their filings based on just random things that their product is now being used for that was never used for in the past. And it shows that there's really a benefit to this technology almost in every niche and domain you can think of. I have a lot of great video ideas for what I'll be making next, and I think you're really going to enjoy it. So let me know what you thought about this. Until next time.